It's time for the big three. We've got 3 stocks and 3 charts for you today. Rick Ducat, of course, will take us through the charts, and here to take us through the trades is Jessica Inskip, Director of Investor Research at stockbrokers.com. Jessica, great to have you with us as always. Would love to start with a big picture thought on this market action we're seeing. I want to check and make sure we still got green. We still have green here on the first day of this Fed meeting. Thoughts on what we've seen so far?
Yeah, absolutely. It's all about the Fed meeting naturally, but more importantly, I can tell you what I'm paying attention to. The commentary that Fed Chair Powell is going to deliver us is of the uttermost importance. But then following that, the reaction that's going to happen, particularly within the bond market. I want to see how the 10-year reacts, the middle of the curve, and then also the long end of the curve. And I'm also looking for commentary of the changes that's happening within the balance sheets. Last time we've got changes that was more easing from the balance sheet perspective starting as early as December 1st. I want to know how that's going, but more importantly, where is issuance? Where is that relative to deficits? And where does he see the path forward and the yield reaction? That's what I'm paying attention to right now.
Yeah, and we did see a really interesting response in the bond market last night, particularly with the 10-year, that whipsawing after that last meeting. So a good point you bring up there. A lot of eyes will be there. But let's get to big three here. Your first pick here, CME Group. Walk us through what flagged CME Group for you.
So this is a longer term play, and it's really with this theme that I'm seeing emerging and really accelerating. It started with the influx of the retail trader that moved into the derivatives market and options market, which we saw accelerate for the past 3 years with record volumes. And now we're seeing this influx of event contracts or prediction markets as a use of soft data, but also as an entry market for the retail trader. It's much easier to trade something that is a yes or no rather than buy an index fund for somebody who hasn't entered the retail trading market ever. So therefore, I think it's an entry that's going to change market conditions, but nonetheless, it's very new. And in its infancy stages, it reminds me a lot of, if we look at history of the options market, we look at history of the futures market, it's rather sporadic. There needs standardization and there needs to be a centralized location. So that turned into the OCC from the options world, and CME Group actually owned that for the futures world. And if we look at the activity that CME Group is doing, grabbing more FCMs and more of their secular story, I think that they are looking at building those rails as we see CME, Interactive Brokers, Kalshi, Susquehanna, even sports style companies coming through with these event type of contracts. They need to be standardized, and there needs to be more of a market system. And I think CME is going to be the one to do that, but it is a longer term play. Important to note there.
All right, so a longer term play here, Rick, as we look at the technicals here, knowing that this is a longer term hold for CME Group, what are they indicating to us?
There's a couple ways you could look at this chart. The first way is to look at it by drawing trend lines. You could start here with our high point just below 291, connect to these intraday highs. That lines up with our next best close. And what we're trying to describe here is gradually grinding downward in terms of our closing prices, which are typically more important than the intraday prices here. But now we can see that we have a more steep downward sloping trend line as well. That's our more current price activity. The other way you could kind of look at it is that it's just a big sideways range between some notable boundaries here, 258 to the downside, and then it's kind of a resistance zone here and here between about 281 to 286. So that's kind of the general boundaries that you could see for the price activity that we've seen recently. The area near 270, our darker green line, lows here, highs, and it's kind of a little bit messier here, but once again, that was kind of where we found support around that 270, 271 level most recently. So it's looking like we could be potentially moving beyond our trend line at the same time that we're holding on to support in this name. So I realize that we're talking more of a longer term trade, but the short term picture seems to be one that we could be due for a bounce here at this point or a breakdown here that could send us down to test the lower end of our supportive zone here, down here near 258. Lines up quite closely with our purple 252-day exponential moving average near about 260. RSI still trending downward here below our 50 midline. So look for price to break out as well as for RSI to break out in tandem. We've got our moving averages right here, yellow 21-day, orange 63-day at about 274 and 272 respectively. Finally, when we look at our volume profile study, most of the volume is just in this big concentration here between about 260 to 275 or so. Not the most helpful in terms of a clear node, but we are getting close to crossing above that threshold here. The volume really starts to thin out once you get higher here, and that could open the door to fast-moving prices and a retest of these resistance areas, 281 to 286.
All right, 281 to 286 right now trading at 270. But again, Jessica saying this is a longer term play for CME Group. This next one we're talking about is IBM. They had a big headline yesterday announcing this $11 billion acquisition of Confluent. Did that play into them being a part of the big three today?
Yeah, it absolutely did. We've talked about IBM quite a bit, actually, and I do think it's a wonderful enterprise solution when we're talking about the AI narrative because of the deep integrations that they have with very compliance-heavy mega cap companies, if you will. The important component of this, though, with the overall AI narrative is they're not in competition with OpenAI or all these other models. They're in partnership with them, and this is another not partnership, but acquisition that really strengthens that narrative. Their acquisition of Confluent gives it real-time data streaming, which is very critical for artificial intelligence. That supercharges Watson X. It enables faster, more accurate AI models that are powered by live data, and it modernized their legacy systems. So think the mainframe type of systems without requiring these costly rebuilds. And why that's important is you have those enterprise relationships, and IBM has those enterprise relationships that are integrated already with those solutions. So this then strengthens their other solutions like Red Hat and Stana, Turbonomic, and all those other core IBM products with this visibility and automation. And I think it positions them into more enterprise AI modernization. That's where demand is reaccelerating. And that is what I'm looking for, is enterprise AI automation. And IBM remains my top pick for that reason.
All right, and Rick, as we look at the technicals for IBM, we do have some choppiness in their chart here, but overall on the year, they are outperforming the market.
Yes, legacy tech company has really done a job of reinventing itself and adapting here. I mean, the obvious standout point is the earnings event that we saw here, leading to this huge rally to the upside. From there, we crossed above some notable horizontal levels once again. We had this small range here that represented some repeated stopping points for price, 288 and 295, that came into focus once again here. Now, after we broke above it, we hit a ceiling in terms of our closing price, at least around 315. Then we retraced and stopped once again right at about 288. So this is a downside area that stands out as potential support. Now we are on the verge of breaking above 315 once more. So we can also see that our trend has accelerated quite sharply. We had this more modestly sloping trend line that has given way to a much steeper trend line here in white, but we are still not really testing it to the downside or anything like that, kind of just more of a sideways range in the shorter term after earnings between 288, like we said, and our ceiling near about 315. So now, if we were to consider our moving averages, our yellow 21-day near 304 lines up very closely with our trend line. So that's one potential breakdown confluence point here. We can also see that our RSI, our measure of momentum, trending upward. Downward trend line has been broken, recrossed above the 50 midline here. So more of a bullish portrait being painted for this particular indicator. When we also assess our volume profile study, there's a notable node that we can see right here lining up with our moving average and our trend line. So that area near 303, 304 really stands out even more than we first thought as potential support. Meanwhile, our linear regression line, our teal line here, line of best fit, lines up with that 295 area here, our supportive area. To the upside, +1 standard deviation channel, 321.42 short-term potential resistance.
All right, well, we are right now at 312.48, so kind of right in between those two zones for you for IBM, and on the year so far trading up 42% higher. Our last pick here is Walmart. Walmart has had a really standout month. They reported some really strong earnings for Doug McMillon's last as CEO, just on the month alone, up close to 11%. Walk us through Walmart here.
Yeah, it's certainly interesting, especially the commentary around Walmart. It goes into this K-shaped economy that we're talking about, and they're seeing more from high-income consumers. And so it's interesting that I think overall earnings pictures that we're focusing on that. Nonetheless, I digress. Walmart is evolving from a retail giant into a diversified tech-enabled platform with improving profitability. And I think the Nasdaq move reinforces that identity. I loved the commentary where we're discussing how e-commerce is really becoming more of Walmart's picture and how they're utilizing AI to improve operational efficiency and, more importantly, those targeted consumer experiences. That's what we want to see AI translate into, is an increase in productivity, but also how does that affect consumption, which is a major part of our GDP. So I think that alignment and switch to Nasdaq shows me that tech-driven strategy and improves across all things. Additionally is their high-margin growth engines with digital ads, the marketplace, memberships. They're all on this path to improving long-term profitability.
Yeah, they have some strong fundamentals there, and you bring up this AI, component there. They also have the partnership with OpenAI to shop through ChatGPT, which every bit of research we see from Adobe says is the future of shopping. So certainly, the move to the Nasdaq indicating that they are moving into that AI world. But as we look at the technicals here, I see an upward sloping channel, but it's not a steep channel.
Yeah, and that was kind of our prevailing pattern for quite a while after we reasserted ourselves after the tariff news shock. That's our low point there. But this blue, more gradually sloping upward channel has given way to a much sharper white trend line going upward here. So we had this old high near about 109. We broke above that level. Now our highs near 116.27 are the point to watch to the upside. We have broken down a little bit from that trend line here. So 109 could be the point to look for a potential supportive area if price continues to give back some of these gains. Often it can happen where during a breakout type of move, you do see some retracement as traders take profits or readjust their positions here before the trend continues in the direction. Not saying it's going to happen, but a very common situation to look out for in trading. So now this level near 109 that represents our old highs. We also have the old channel boundary and our 21-day EMA. So that would be another extra level of weight on that as a supportive level. RSI following along with price. We are out of the overbought area, so more of a bearish signal from that regard. And we've also broken beyond our trend line. So is this a consolidative phase before the trend continues, or the start of more of a give back? Time will tell, but those are the notable areas to watch out for so far. We can also see now we have our +2 channel and our +1 channel around 111 and 117. Those would be some boundaries to watch out for on the road toward that supportive area once again.
All right, right now trading at 113.91, up a little more than 21% in the last 12 months, slightly outperforming the Nasdaq, which it did just recently join, as Jessica pointed out for us. Thank you to Jessica Inskip from stockbrokers.com for being with us for Big Three today. And of course, Rick Ducat for always taking us through the technicals.